Welcome to the deep dive. Today, we're really putting a magnifying glass on a big one in pharma, Merck & Co., ticker MRK. Now, Merck's been, a steady player for ages, but is something bigger happening? Is it maybe on the verge of a real shift? We're going to unpack the charts, dig into the financials, and look at what their pipeline might mean for the future. Let's get beyond the headlines here.
Absolutely. Our goal today is really to connect those dots, between the sometimes complex market signals and what's actually going on with Merck's business. We want to give you a quick but really thorough feel for where MRK stands right now and where it might be headed. You'll see how different angles, different analyses are kind of pointing towards something pretty compelling.
Okay, let's kick this off then. Let's start peeling back the layers on Merck's stock chart. Starting big picture, that long-term view. When you look at the monthly chart, it certainly looks like Merck's been riding this sustained bullish wave going way back, right, like March 2009. Is that what you're seeing too? And how important is that long view?
Well, definitely. What's fascinating is how these long-term trends really tell a story. You're spot on. That bullish trend since '09 is, it's undeniable. But here's what I think is the really crucial part for Merck. Back in October 2022, you see the monthly candle that represents the whole month's trading. It broke and closed above its old all-time high, the one from way back in November 2000.
Wow, November 2000, that's a long time. A 22-year high broken.
Exactly. Think about that. A nearly quarter-century breakout. This isn't just, a blip on the chart. It suggests something fundamental might have shifted in how the market sees Merck's long-term potential. It's like the market started pricing in a new era of growth, maybe reflecting that pipeline strength finally coming through. And right now, MRK is trading around, $79? And here's the interesting bit. It's actually testing that really crucial long-term trend line, the one that started back in 2009. This is, it's a key moment. These long lines often act as major support.
Okay, that October 2022 breakout, it sounds huge, but, playing devil's advocate here, couldn't that just have been a temporary spike? We see those sometimes. What makes this one feel different? And when you say testing the trend line, what does that mean, technically speaking?
That's a fair question. Not all breakouts stick, right? But this one feels different, mainly because of the sheer time involved. Breaking a 22-year high after consolidating for so long, that's rare. It suggests deeper fundamental shifts are being recognized. It points more towards a real change in momentum, not just, say, short-term speculative buying, and about testing the trend line. Basically, as the price comes back down to touch this line that's historically pointed up upwards, we watch closely. Does it bounce off it, confirming the trend's still intact? Or does it break below, signaling maybe a deeper pullback? We've also identified a strong demand zone for MRK stock, down between $62 and $73.
A demand zone, so like a price floor where buyers tend to show up?
Pretty much, yeah. It's a price range where, historically, a lot of buying interest has come in, stopping the price from falling further. Think of it like a safety net or a trampoline almost. And connecting this to right now, the monthly RSI, that's the Relative Strength Index, a momentum tool, it's actually dipped into what we call the oversold zone. It's near the 30 level. Now, for fundamentally strong companies like Merck, seeing the RSI get that low is, it's pretty rare. And often, historically, it's come before a significant trend reversal. It suggests the sell-in might be running out of steam.
So, okay, we've got these strong long-term signals, a potential turning point right now at the trend line, and this rare oversold thing happening on the RSI. What does this mean more immediately? Let's maybe zoom into the weekly chart for a closer look. On that shorter time frame, you can see the stock's been in a kind of descending channel, right? Like it's been drifting downwards lately.
Exactly. It looks like it's taking a breather, correcting within that larger bullish cycle we talked about, tracing that clear downward slope, but still within the bigger picture uptrend. And this brings up the critical question for, shorter to medium term perspective. What could actually trigger a reversal out of this downward channel?
Right. What signals would confirm that maybe the correction is over and it's ready to head back up? And if it does reverse, what kind of price targets are traders potentially looking at?
Well, it looks like a potential bullish reversal is trying to form. The key signals we'd watch for confirmation are a couple things. First, you'd want to see a weekly or monthly candle firmly rejecting that $62, $73 demand zone. Like price goes down there, buyers step in hard, and it closes well off the lows. That shows defense of that level. And crucially, you'd also need a decisive breakout above that descending channel line on the weekly chart that would signal the end of the correction. And adding to this picture, the weekly RSI is showing something called bullish divergence.
Bullish divergence, what exactly?
Okay, so the price itself has been making lower lows in this channel, right? But the RSI indicator, that momentum gauge, has actually been making higher lows during the same period. So price down momentum indicator kind of subtly turning up. This discrepancy suggests that the underlying selling pressure is weakening, maybe buying interest is building quietly. It strongly hints a reversal could be coming. Now, if we get these confirmations that bounce off demand, the channel breakout, then potential upside targets could be up around, say, $115 to $120.
$115 to $120. Why those specific levels?
Good question. Those levels line up with previous supply zones areas where selling pressure overwhelmed buying in the past, and they also align with key Fibonacci extension levels. These are technical targets derived from prior price swings based on mathematical ratios that often act like price magnets. So putting it all together, this technical setup looks like a potentially high reward situation. You've got confluence from multiple time frames pointing the same way.
Okay, confluence, multiple time frames. Sounds compelling technically, but charts are one thing. They don't tell the whole story. To really get if Merck is on the cusp of that significant shift, we need to look under the hood, right? At the actual business. What do the fundamentals tell us? Its intrinsic value, its financial health. How does Merck stack up there?
Right, and this is where it gets really interesting because Merck's fundamentals seem to provide a really strong foundation for those technicals we're seeing. Let's talk valuation first. Using a discounted cash flow model, a DCF model, which tries to estimate value based on future cash generation, Merck's intrinsic value comes out around $119.90 per share. Now, compared to its current price, around $78, $79, that implies roughly a 52% upside. Significant potential there.
52%, that's quite a jump. Are there other ways to look at value?
Yeah, there are. It's important to look at different models. A model based purely on free cash flow gives a more conservative value, actually closer to $66.40. That suggests maybe it's trading a bit above that specific value measure. However, and this is key, when you compare Merck to its peers using relative metrics, the picture looks undervalued again. A relative DCF points to around $90.30, and an overall relative value comparison puts it near $121.60. So you see, while the exact number varies depending on the model and assumptions, the overall theme across different methods points towards potential upside, somewhere in the range of, say, 14% to maybe 54%. It suggests the market might not be fully appreciating its worth.
Okay, that's a pretty wide range, 14% to 54%. How should we think about that variability? What might push it towards one end or the other? And beyond these valuation models, what about the simple hard numbers, the key financial ratios? How healthy is the company really? Because undervaluation is great, but only if the company itself is solid.
That range definitely highlights that financial modeling isn't an exact science, right? Different assumptions about growth, risk, market conditions lead to different numbers. The higher end usually reflects more optimism, maybe successful drug launches, things like that. The lower end is more cautious, unexpected trial results, patent cliffs, those can shift things. But like you said, the consistent message across models is potential undervaluation. Now, diving into those core ratios, Merck's price to earnings, or PE ratio, is hovering around 11.5. That tells you how much investors pay per dollar of earnings. And 11.5 is, well, it's noticeably below the average for its sector. Suggests it's potentially cheaper than its peers.
Okay, cheaper PE. What else?
Its price to book ratio, PB, comparing market value to book value, is around 3. Then there's leverage. Its debt to equity ratio is about 0.6. That's pretty moderate. It's not concerning because that debt level seems comfortably supported by its reliable earnings and strong cash flow. It's not overstretched. And for short-term health, its current ratio is near 1.37. That means its current assets, cash, receivables, inventory comfortably cover its current liabilities. They have about $38.8 billion in current assets versus $28.4 billion in current liabilities. So good short-term liquidity, no immediate cash crunch worries.
Got it. Solid balance sheet, seemingly. What about performance, revenue, profits, the top and bottom lines, and the dividend? Lots of investors care about that, especially with established companies like Merck. How's that looking? Is it stable? Growing?
Performance has been impressive. In the last 12 months, Merck pulled in about $64.2 billion in revenue. Net income, a very healthy $17.1 billion. And maybe most importantly, it generated around $18.1 billion in free cash flow. That's the cash left after running the business and investing in it. That's real money they can use for dividends, buybacks, R&D, whatever. They benefit from strong margins too, a gross margin around 76% and return on invested capital, ROIC, around 21%. That shows they're using their capital efficiently to generate profits.
High margins, strong free cash flow, and the dividend.
Yes, the dividend. Merck has a great track record here. 14 straight years of increasing their dividend payout. That's consistency. Right now, the yield is around 4.0%. That consistency and yield really speak to the company's financial stability, its cash-generating power, and its commitment to shareholders. It's a big draw for many. Oh, and insider holdings. Pretty typical for big pharma. Executives and board members hold some stock, but not huge amounts, is generally seen as a neutral factor here.
Okay, so the picture emerging is strong technical setup, hinting at a turn, fundamentals looking solid, maybe undervalued, good profitability, strong cash flow, growing dividend. But like you said, pharma is all about the future, the pipeline. What's actually on the horizon that could fuel this potential upside? What are the specific catalysts we should be watching that might, ignite that shift we talked about?
You nailed it. Merck really does blend that solid foundation with a very active, forward-looking pipeline. And there have been some really relevant updates just recently that could be significant catalysts. For instance, just late June 26th, the CDC's Advisory Committee, ACIP, recommended a monoclonal antibody dose for RSV, specifically for infants. This directly benefits Merck's pipeline. It could open up a huge new market.
RSV in infants, that sounds like a big deal from a public health perspective, too.
It really is.
Yeah.
Potentially protecting millions of vulnerable babies. It positions Merck well in a critical area. And then just the day before, June 25th, Merck announced they launched an internal generative AI platform. Now, this isn't just, buzzwords. They're specifically aiming this AI at speeding up clinical reporting. Think about that. If they can use AI to analyze trial data faster, write reports quicker.
That could shave time off development, get drugs to market sooner.
Exactly. It could dramatically accelerate things, potentially saving months, maybe more, in getting new therapies approved and available. That's a huge competitive advantage. And beyond those very recent items, they continue to report progress in their HIV pipeline, still a massive global health need, and also in advanced trials for pulmonary arterial hypertension, the Hyperion trials. So multiple shots on goal, really.
Lots of potential drivers there. So, okay, let's try and tie this all together. We have the technical signals, the strong financials, and this promising pipeline activity. What's the final takeaway when you put all these pieces together? It really does sound like that confluence you mentioned earlier.
It does. When you look at Merck holistically, a picture seems quite clear. You've got robust cash flow generation, you have high profit margins, and that reliable growing dividend. All of that is underpinned by what looks like a very promising pipeline in key growth areas. RSV, oncology, HIV. Then you layer on the valuation aspect. Various models, as we discussed, consistently suggest upside potential anywhere from that 14% to 54% range. This is further supported by that relatively low PE compared to peers, the solid liquidity, the manageable debt. And these upcoming updates, news on trial results, potential FDA or CDC decisions on things like that RSV product, these could act as powerful near-term catalysts. They could really reinforce the bullish signals we're seeing on the charts. It really feels like a strong convergence of factors, suggesting this, established giant might actually be entering a new dynamic phase.
Wow. Okay, we've definitely gone deep on Merck & Co. today. We've looked at what the charts are hinting at, what the numbers seem to confirm, and what the future pipeline might hold. From that rare oversold signal way back on the monthly chart, suggesting a potential bottom, to the solid intrinsic value estimates pointing to potential upside and that active drug pipeline. Yeah, there's certainly a lot to think about with MRK right now.
Absolutely. And this whole exploration of Merck, it kind of leads to a final thought, maybe something for you, the listener, to mull over. In today's market, things change so fast. How does a company like Merck, with this long history, this reputation for stability and these strong current financials, how does it balance that heritage with pushing hard on the cutting edge, investing heavily in its pipeline, adopting new tech like AI? What does that combination tell us about how these established giants might evolve and compete in the future? And maybe where do you see the next big insights emerging in the whole pharmaceutical space as these older players adapt? Something to think about.